Piper with the weekend video clip, and it's Saturday the 3rd of June. We had the A-B CrowdGuard conference on Wednesday. One of the speakers was Bill Adlard, who gave us his long-term counts on various markets, so I thought it would be interesting just to have a look at some of those. This is Bill's count from the 1932 low down there. You can see a clear 1, 2, 3, 4 and a fifth wave, and we're now in the fifth of a fifth. Okay. One point I would make is that this rally here, the 40s and 50s, was a time of real growth, and things were developing, and there was a lot of real stuff happening. This move here, especially this move here, is a time of financial engineering. I'm not saying there wasn't real growth, and there certainly is real growth, but there's also quite a lot of fiddling around with the exchange rates, with the basis of the currencies, QE, etc., etc. The point I'm making is that this is quite a long move, and it's certainly possible that an alternative count might be that it's actually a 1, 2, 1, 2, 3, and then a 4 and a 5. However, that would mean that any pullback from here might seem, well, from what I'm saying, you might think, well, that's a relatively gentle pullback. However, that little blip here was the 87 crash. So a wave 4 correction of this degree would still be a very solid move down, and would certainly shake things up considerably. Right, going down to a weekly chart, and from the low that we saw in 2009, we can then count a 1, 2, 1, 2, 3, 4, and a fifth in progress with a 4 and a 5 to come. There's a guy called Proctor in the States who's quite a well-known Elliottician. He reckons that any peak here would be the final peak. Bill disagrees. I think Bill's count is neater than Proctor's. Anyway, the conclusions are that a next major topping area, that's this one here, between 2018 and 2019, January 2018 2019, between 23,343 and 24,828. Obviously, there's a rough estimates, but if so, although we've still got a few more months to go, obviously the major part of this advance is behind us, and this decline here could be quite a savage affair. I mean, these are log scales. So it would still feel quite sharp, certainly more than we've had for a while now. I mean, this is the 2015-16 experience, which was quite a deep correction. It could be deeper than that, as it's a larger scale. But this is a useful roadmap to use going forwards, and certainly monitoring it quite carefully. Okay, now going to my own count, as it were, at this point. Bill counts this as a low, we've just looked at, with a 1, 2, 1, 2, 3. Now that could be a complete 4. Bill's thinking that it might extend. However, that was before this new high came in. So assuming that the fourth wave is there, then 1, 2, and this could be a 3 coming in, which would complete the move from here. We then see a bigger fourth wave correction, but certainly we're in the final stages. Obviously, it gets a bit complex at this point, and I appreciate that it can be a bit too much to grasp in a presentation like this, which is fairly short, obviously. But this move could be some kind of terminal move. Let's have a look at that in a bit more detail. Well, it is actually possible to say this is a 1, 2, 3, 4, 1, 2, 3, 4, and another 5. That would obviously short circuit the whole thing. Rather depends on what we see happening. If we see another peak above there, which we probably will see, I suspect. But this should be, I think, this move from here, which is actually quite a short-term move, should be the end of this particular piece, in my view, unless it becomes an extended ABC, as I just said. Anyway, I hope that interesting and useful. I found it a bit, I can understand. If you have any questions, please let me know. Now looking at FTSE and going from the same low, 1, 2, 3 is pretty clear. 4, count this as a 1, 2, 1, 2, 3, 4, 5, 4, 1, 2, 3. Again, that would allow for a peak in the very near future, but it could be a wave 3 peak before we see the 4 and the 5 that Bill has brought up. So I have to monitor that quite carefully going forward. This is the hourly chart. So 7.5 was resistance for a while. Is that so? It's there, isn't it? So it was resistance. Now it's become support. But it's all looking a bit unsettled at the moment. This is obviously the key level for now. It all depends what happens next, really. I mean, there's a case that we're seeing a peak, but it's again zero confirmation at the moment, and I always look for confirmation. That's a key thing. So I'd like to see a move off here with some force, and that's something that had to be we had to leave to the future. Right, a fairly long report on Elliott, so I think I'm going to leave it there. We'll discuss gold in the week. Not a huge amount happening right now in any case. Bitcoin's recovered quite significantly, which is encouraging, I guess. Rather what I expected to see. A lot of people getting into the cryptos, so a lot of support at the moment, I would say. And that big fall we saw has proven to be a good buying opportunity. Albeit if you buy mining shares, then you sort of bypass the price increases as I've discussed previously. Anyway, thank you for listening. Hopefully that was useful. Back to the report on Tuesday morning for subscribers. Have a great weekend, and bye for now.